Is now the time to look at commodities? And if you want to look at commodities, is BHP Billiton the company you want to own? We'll take a look. I'm sure many of you know the name BHP Billiton. It's one of the global commodity companies located in Australia, but really with interest around the world. But has that been in the interest of shareholders? No. It's been a rout for shareholders. Why? Well, let's look at the markets they're in and the markets they're selling to. Here's the stock. You can see trading down at about, this is in dollar terms, about $25, but the high was about $90. So if you own this stock, all you've done is run, yelling and screaming around your desk thinking, why did I ever get into that? What does BHP do? Why are they losing money? They're a commodity company. And they're not just a commodity company, they're a commodity company that sold a lot of commodities, especially iron ore, petroleum, copper, other minerals to the China market. So they're in China, which has been doing terribly, as we all know. Commodity prices are horrible. So they're getting the cash flow on all their businesses is in collapse. And the market, they've got a lot of debt. They have a debt, not that they want to have the debt, they got to buy the commodities and they've got to have the ability to pull them out of the ground. So all in all, China, commodities, Australasia, copper, iron ore, petroleum. Tell me something else that comes at you in the way of bad news. No, they've cornered the market in bad news, and the stock price reflects it, $25 a share. But it could be expensive at $25 a share. I like the idea that commodities could be at the bottom of its cycle. I've seen in the last couple of weeks that some of these markets have been turning around, and BHP is probably not going to be a $25 stock. The problem is it's still expensive. The dividend yield, yes, if you look on paper, it's quite high, but they're borrowing money at this point to be paying the dividend. Why are they doing that? Because they don't want the stock at 16. They want to keep the ability to raise new capital for their businesses. Have we seen the worst of the commodity markets in terms of oil, in terms of copper? I don't know. Not a commodity expert in terms of forecasting. I think that oil just isn't going to trade at the $7, $8 a barrel range, and at some point, China, some of these other markets, they have to begin resupplying their inventories, and BHP is a winner. Do I like BHP at $25 a share? No, I don't like it. I feel I want to like it at $25 a share, but I feel it's expensive. I think they're on a tightrope. How do you keep paying that dividend so that the clients think, oh, this is a good yielding stock, at the same time covering their business with cash flow? And cash flow is the name of the game, whether it's in China, whether it's in Australia, whether it's in copper and iron ore, and they've suffered. I think it's a good management. I like the company. I like the concept of the company. I guess I wish it wasn't just only in commodities, but it's too late at this point to change. End of the story, I find it's expensive. Do I like the company? Yes. Do I like it at 25? No. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.